I actually did an entire podcast episode myself on, I don't think it was a podcast episode. I think it was just for my channel, like my PBJ Mortgage TV, about interest rate and why it's important, but it is not the only thing that matters. And so let me kind of explain why the lender that you use really can kind of, I guess, make or break your process. So I will tell you, first of all, what most people don't realize is how many people are actually involved in a real estate transaction. There are a ton of them. And the one thing that's super important to remember is the lending institution, we are the central point of that.
Thanks, Jax, for being here.
Of course. Thank you for having me.
So I want to talk about, because I think from the lens, I love like picking people's brains from the back end of and sharing and it kind of exposing, for lack of a better word, of what you see on your end. So tell me, because I think most of my listeners have had mortgages. For a lot of us, we would probably think now, we might think a mortgage is a mortgage is a mortgage, or a lender is a lender is a lender. And also we've had lenders or mortgage companies who have been very fun to deal with, and we have had some who have not been. So tell me kind of what your approach to mortgage lending is, how it's kind of different than maybe what mainstream kind of tells us or teaches us what mortgage lending is.
So first of all, I will start by saying I've done all the things in lending. So like if there's pretty much a job in lending, I've done it. I've been an underwriter, a processor, mortgage compliance. I hold a law degree, but most of my career has been spent in origination. For those of you who are not familiar with what origination is, it's basically the person who's a front runner talking to you and setting up your loan to be able to get it made, right? So it's a loan officer person, right? That has mainly been my period of expertise. And I will tell you, it's not entirely your fault that you think that all lenders are created equal, because really big players in our game have convinced you that the only thing that matters in the mortgage space is interest rate. I actually did an entire podcast episode myself on, I don't think it was a podcast episode. I think it was just for my channel, like my PBJ Mortgage TV, about interest rate and why it's important, but it is not the only thing that matters. And so let me kind of explain why the lender that you use really can kind of, I guess, make or break your process. So first of all, understand that not all lenders are created equal in how much experience we hold, right? So loans, there are, first of all, hundreds of different kinds of loan types. So I guarantee you've heard of the big ones, right? You've heard conventional, you've heard FHA, you've heard VA, you may have heard of USDA, you've heard of jumbo. These are probably the ones you've heard of. What you don't understand is that there's products that are underlying each of these buckets. That's one thing. And then there are even more nuanced. So there's like weird specialty products, non-QM loans, like there's all these different kinds of loan types and products. And so I think a lot of people have this idea when they're buying a house, because they're trying to equate it to the most similar experience they've ever had. It's similar to buying a car. Car loans, there's really only a couple of options, right? Mortgage loans, if you disseminate it down to the amount of different choices we can offer you on interest rate, the amount of different programs we can offer you, the amount of different lengths of time that you can take out the loan for, right? So 30, 20 or 15, 10, all these different kinds of combination. You literally have millions and millions of combinations of choices that we can offer you. And so if you don't have any experience utilizing all those different program types, really disseminating down and understanding the unique profile of each and every person, it's super hard to be able to give clear and actionable advice. And so what happens is the lending person is probably just going to take the path of least resistance, and whatever it is you say you want, they're just going to give it to you. So if you say, great, I want the lowest interest rate, even if that interest rate may not be the best choice for your financial needs, they're just going to provide it for you because it's the path of least resistance. It means that they get the sale, and so that's what they care about. And I firmly believe that that should not be the case. Each person is unique. You have unique needs. It is my job to not only disseminate what those are, but also push back on you if you are making what I believe might be a wrong step, right? So it's still going to be your choice. I want to empower you to make that call. But if I have more information than you do, which I do, I need to be able to my fiduciary responsibility of saying, hey, have you considered this? you should maybe look at this. This is why. And unfortunately, a lot of people in my space, they only see the dollar signs when they enter mortgage. They don't really care as much about the individual. And that makes me very sad, first of all. And then, second of all, it just yields a lot of people not understanding their process, not being informed, and not making educated, empowered decisions. And it is what my brand is all about and why I even started in the first place.
Yeah, you touched on something that is really important to me as a consumer is you said knowledge or time, time and motion doesn't necessarily equate knowledge, right? Because
A hundred percent.
someone could stay somewhere and not learn. But you and I have had conversations offline and I've been on your podcast and we've had conversations around that. And it's important. And I think that you do, right? Like you have the knowledge and you care. And that is something that a quarter of a point or like you're paying for the knowledge and the expertise of someone, even though you're still going to run it back through your own intuition and check your decision making. But like what you said, right, when someone knows more than you, it's like I have clients that say all this all the time, like I don't know what I don't know. And it's like, yeah, then you want to be working and have a team of people that are going to advise you about things that they have seen on their back end that you might never even think about. And I
Correct.
also think with lending, it's very similar, like what you kind of said to realty. It's like it might be easy to get into, like the barrier to entry is very easy, kind of like coaching. Like I think anybody
For
could just
sure.
be a coach, right? But
Right.
like, what are your tools in your toolkit? What experiences have you seen? What have you done? And how have you serviced clients? I think is so important because I think a lot of times, also as the consumer, we think that we have to go with this mortgage company. There's been several times that we have bought houses and the realtor wants to go work with this mortgage company or lending company. And I'm like, absolutely not. Right. And
For
so
sure.
just having knowing this and knowing you have a choice with your lending company, even if it's not what
Sure.
your realtor goes with. And I have worked with mortgage companies who have fumbled the ball, even though I have been calling myself. Um,
Absolutely.
and I've also worked with lending companies who have closed our home in less than 6 days. So it all goes back to like, do your due diligence and also like what you're saying, it's not all about the money, right? Money does matter, but at the end of the day, the relationship, because I think about it this way too, is like, you're probably not going to buy just one home your entire
No.
life. And so you want someone that's going to grow with you and to expand and to advise you as you grow your assets and, you know, step into different mortgages and change houses or rental properties or whatever it might be.
Stay tuned. We'll be back right after this message from our sponsors.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified course and resource platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified course and resource platform. Start your path to financial independence now.
Visit us at fms.tips and fms.college for more information. Hello and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4693733-107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Thanks for your patience.
Well, I'll give you a perfect example of this, exactly this. So your patterns that you don't even realize you create financially, they show up places.
Yeah.
Okay. So we had a client one time who's referred to us and we started talking to them and he was adamant that he wanted a 30-year fixed interest rate. Okay, perfect. No problem, right? Because of course, ARM loans or adjustable rate mortgages, for those of you who don't understand that that's an acronym, got a really bad rap, right? In the 08,
Mhm.
09 crash. Lots of people started believing that they were kind of the devil and this is a horrible product. Historically speaking, they actually perform better than fixed rate mortgages, like over the course of time, but they don't fit everybody's situation. Okay. And so we were reviewing his credit report, and what you could see was a clear pattern that every 2 to 3 years, he either refinanced or sold a house.
Yep.
Literally. I mean, it was on his credit report. Boom, 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 boom. So I challenged his viewpoint and we said, okay, so I totally understand you want a 30-year fixed rate of interest. That's great. That's awesome. Why? Well, because, I don't want to deal with an adjustable rate loan. Okay, that's fair. Do you understand that there are such things called fixed period arms, which means that it is fixed for a period of time, usually 3, 5, or 7 years. And then after this period, it does adjust. There's very specific numbers that determine these adjustments. We can explain them to you. But I will tell you, historically speaking, from your own credit profile, you show that you usually only keep this loan for this long. So you actually are going to pay a higher interest rate by doing this than taking this ARM product. I understand from your perspective that in your mind that is a riskier product. It is. And
Yes.
but it's a calculated risk, right? And so I'm not telling you to do it. I'm telling you should take it into consideration based on your own profile of how you spend and use money. This is
Mhm.
not Jack saying, "Oh, I want to push my client into an arm loan." This is me looking at your situation and saying, "This might be something you want to take into consideration." And unfortunately, a lot of people, again, because they just want the money, they're not going to challenge the viewpoint of the consumer. And in
Yeah.
my mind, a great expert does that. It is my job to give you a different perspective, to give you a different viewpoint, and then trust that I gave you the information and that you know yourself well enough to say, I think this is what fits me and my family. Or, no, I still want to go with what I wanted originally. Great. I don't struck the check like you do. That's fine. I just want to make sure that you have the information so you can make a well informed choice.
Yeah. What do you see? Like, if you were to think of like the top three things that you see on your end in your back office that maybe we as the consumer aren't aware of, that you'd be like, oh, if I could tell you three things to pay attention to, these are the three. I mean, I'm sure there's probably way more than that, but like, what are the top three
Oh,
that come
yeah.
to mind?
So I will tell you, first of all, what most people don't realize is how many people are actually involved in a real estate transaction. There
Mm,
are a ton of them. And the one thing that's super important to remember is the lending institution, we are the central point of that. In essence, you can think of us as sort of the ringleader of the circus. So we're trying to make sure that everything is going on, right? That each act is coming on as they're supposed to, and that people aren't throwing wrenches. And we joke all the time that if everybody did their part in the transaction and didn't throw any wrenches, man, we could close millions of transactions a month. It would be easy peasy. But unfortunately, life be lifing and humans be humaning. And so that doesn't exactly go according to plan. And so the challenge is that if you don't have somebody who can pivot and understand and has, we usually have plan B, C, D, we usually have a couple of them, Or if we don't have those plans, you also know, like, Aaron, look, here's a situation. This is a very difficult file. Like, you understand, here are the challenges. Here's how we're combating them. Like, we're very transparent. And what you have to understand is like, if you do not only not have the knowledge on the back end to make these things fly, but also if you don't have a team that has the ability to pivot, it can really bite you in the rear end. And I'll give you a very recent example. We had a client doing a very difficult loan. So he was having to do a non-QM loan. For those of you who are not familiar, that means non-qualified mortgage. And it doesn't fall under the standard Fannie Mae, Freddie Mac rules of play. And so it was a bank statement loan product because he's self-employed and everything was fine. We went in for clear to close. And for whatever reason, we believe it was actually about the interest rate we had locked in at because the market had shifted. The underwriter decided to decline the file. We had to restart.
And they just have do they have full authority to do that?
They do.
Okay.
They do. And
so they
the
could be
thing
clear to
is-
close. I mean, clear to close is like within a week, right? Like that's pretty, like you have that information pretty, maybe a couple
Clear
of
to
weeks, right?
close,
Like
if the lending institution is good, we usually try to have the clear to close at least 2 to 4 days prior to close, but it does
Okay.
happen later than you think of the transaction. So understand what happened first is we got an approval. We got a conditional approval that said,
Yep.
hey, as long as you meet these conditions, you're good, right? And they gave us the thumbs up. So we were good. We met all the conditions, but they just decided they didn't like one little piece of the paperwork. And again, I firmly believe it was about the numbers, that the interest rates had shifted negatively. So the rates had gone up.
Meaning going up. His interest
They-
rate he's actually getting less.
A
He's
better
going to have to
deal.
pay less. Yep. A better deal.
That's right.
Mhm.
And so they were like, heck, we don't feel like this risk is worth it. And so the underwriter said, nah, we're just going to get rid of it. Well, I mean, this guy has a whole bunch of money out there and a whole bunch of money on the line. And so what did my team do? Not only did we have to shift it to another company, that's why we're a broker, we could shift it and move it over to somewhere else. We actually end up getting him as close as we could to the rate. Because remember, I told you the rate increased to not hit him because technically it wasn't his fault. I mean, it wasn't ours either, but it doesn't matter. We did right by the client to make sure to not only hold this long-standing relationship, but also to make sure that we mitigated some of what he would have gotten hit with, right?
Yeah.
And so the ability to pivot is a huge factor, right? The other thing that I will tell you is it is so, 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 so important that the person you're working with ask you questions up front. Because remember, we were just literally talking about an underwriter and their ability to make or break those deals. I always tell my clients it's like this. We're painting a picture and we need the picture to be complete. And even though some of the things in our lives might not be pretty, right? Like we had a little snafu or we had a job loss, like a little gap, right? Or we totally blitzed and forgot to make a payment on a credit card or whatever it is. It's not that that is a big deal because an underwriter is a human and can understand that sometimes life happens. We need to paint a complete picture and we need to be on the same page, and you have to be transparent with us and we have to be transparent with you. And if those things aren't happening, I will tell you 9 times out of 10 when things come at the end of the day, it's because somebody hid something up front.
Mm.
And I will tell you, you think you can get away with it. I promise you. I literally wrote the book on it, Mortgage 101, The Secret Sauce of Home Buying. That book, I actually give several examples where like people tried not to listen or they tried to do it their own way or hide something. And guess what? Because we run a battery of reports. This is something that a lot of people don't realize. We run reports. I don't think you know to the extent of the reports we run. We run a fraud report, has your name. And this is there are going to be other people with your exact name. Did they pull up on fraud report? And then we have to cross-reference to see, is it actually you or is it some other person with your name? We run reports to see if you own any other properties. And a lot of times this is where mom or dad threw you on the title to something and you may not even have really realized it. All of a sudden, guess what? It
Or-
pops up.
Or credit cards. I've had my ex-husband, actually, he didn't know I think we were actually trying to get a house. I think that's how it came out. And we realized that his mom had been using his credit cards
Yep.
unbeknownst to him
Oh
and did
yes.
not pay them, or they had a line. I mean, like, we're not talking like $100. We're talking like thousands, maybe tens of thousands of dollars. We found
Oh
that
yes.
out. So yeah.
You'd be surprised. I mean, and so literally you have to trust us implicitly. And if you don't, if you aren't willing to share all this information, I'm going to tell you, no matter how wonderful the lender is, you should consider finding one that you do trust, that you can lay bare to. Because the truth is that first of all, we don't usually get to decide what pieces of information we need. We get told, right? Also, understand that the better the lender, the better like understanding, the more of the expert they are, the less of that chaos you see. I can guarantee you there's somebody who's listening to this podcast right now who said to themselves, man, I felt like they asked me for 4,000 pieces of documentation. The reason that happened is number one, they didn't ask you enough questions up front. Number two, when the chaos started happening on the back end and all these question marks started popping up, the lender did not push back at all. The loan officer, they didn't say, hey, you don't actually need that. You have this piece of information. We can make an inference here. And my team does that. The back end, we will push back on you and we will say, hey, not to say that we will not get the underwriter what they need. We will get the underwriter what they need, but we are not afraid to say, hey, in our experience, we've used this. This should be sufficient, yes? And the underwriter will be like, oh, yeah, you know what? You're right. Right? Because again, they're humans too, and they're working through 800 different files and trying to, go down. And so sometimes they throw some conditions into the mix that are maybe a little bit unnecessary.
Yeah.
And so we're protecting you from that. It's actually why PBJ Mortgage was born. We're making mortgage simple. Simple as making a peanut butter jelly sandwich. We wanted it to be as simple as you just following steps and trusting us so that the chaos does not come into your life. It's already a stressful process. You do not need more stress added to the transaction. It's just unnecessary.
I want to go back and say something that you said, like about hiding. And I want to say to each of you that are listening, I think that this comes down to our emotions, right? We hide from things when we feel shame and guilt. And Jax and I
For
have had
sure.
several conversations offline about money. And I mean, she helps her clients with money. I help my clients with money. It's ultimately all about emotions, is really, I mean, it's
For
it's
sure.
numbers, but it's really emotions. And so if you are hiding something, or you feel, for what, if I'm being completely honest, which I always am, what always comes up for me is that inadequacy. That is what I feel.
100%.
The not good enough, or the not, I mean, it doesn't matter what the numbers are, still not enough is what, and which is ultimately lack, which, that's what I work on. But I think for a lot of us, right? Like we fantasize that all of these other people have all their shit together and we're the only ones that, think that we are like a mess. And number one, not true.
100% not true.
And I'm sure Jax can attest to how many thousands of loan applications she's seen, like, right? Like, we all have our things. And I think that I would advise that before you actually, like, even in the process, but like really get clear and work through some of that emotional stuff, because
For
it's
sure.
coming up, because it needs to be released and processed. And so, like, you can do that. When I say on your own, what I mean is, like, if you're feeling that, before you go into a conversation with your lender, right? You need to, like, journal it. Or, like, I mean, I was even feeling that. We recently, purchased a car, and I was like, nope, before I fill out my application, I'm going to shift this energy. Right. And then I went into the energy of, like, no, you would be lucky. I have paid everything on time all the time, and so it's that mindset that we have around fear and shame and guilt that we have with money. And I want each of you to know that you are not alone. We all experience it. And also, like, telling yourself more empowering things to go into lending, like, from that space.
Well, I'm like you. I'm incredibly honest, and I will tell you guys. So first of all, this is life is all about living in alignment, and understand that when you're making decisions, they're not all going to work out according as planned. It's just that is just the way. And so you can't hold shame and guilt. I mean,
Yeah.
Aaron knows my personal situation. Like, we have this big calculated risk that my husband and I took in real estate on a property, and it's not necessarily that the risk hasn't paid off, but the entire scenario where life just kind of started lifing has really basically put my husband and I in a financial turmoil that is huge. I mean, to the point where we're practically bankrupt. Okay, just to be very transparent with your audience. And understand that I have two choices here. I can sit in shame and be like, oh my gosh, right? Like, I'm supposed to be the expert in this space. Like, how could I get myself here, right? Or I can know that there was a lot of pieces of this puzzle, some of which were outside of my control, right? And all I can do is control myself, my emotions, what's going on inside of me, to make and bridge the gap, right? And move forward in the best way that I can. And it actually was going to bring me to one of the points I wanted to talk about too, is strategy, because I agree with you. Oftentimes when we start having feelings about the stuff bubbling up, we need to step back and we need to be a little bit more strategic. We need to ensure that we are in alignment. We need to understand, because I jokingly say that anytime you come to me and you want to purchase a house, the answer is not no. It may be not now, but it's not no. And we can pretty much figure out or educate you, get through almost anything you've got. So as opposed to sitting yourself in shame and wasting time and valuable resources of energy, right? Of sitting in the guilt and the shame, instead, take some time for yourself, really step back, and then pick an expert that is going to be empathetic, that's going to understand that sometimes stuff happens, right? It just
Yeah.
is what it is. Those people will be in your corner. They will show you how to fix it. They will show you what needs to happen to make your dreams a reality, but not if you're too afraid to ask the question, to put yourself out there, whatever. I mean, I literally spend so many hours creating not only content for the podcast, videos for my other YouTube channel, lead magnets, as well as books and resources to show people, hey, like, there is education out there. Like, you can get a little bit down the path and then find that expert. And that's what you have to do. So I just wanted to make sure that I let you know, like, hey, me too, right? Like, I have had some challenges too, and it doesn't mean that you can't be hugely successful or exactly where you want to be, right? You just have to be not afraid to take the step.
Yeah. I think one, thank you for sharing that, because I think a lot of, I mean, our forefathers, like they wrote it into the Constitution, right? So
For sure.
it's not a, I think that there have been people that do experience bankruptcy. There is this shame around it, right? But depending on the energy that you went into it with, right?
For
And
sure.
if you go into it with the energy of like, I'm betting on myself, I'm doing the thing, like that's
Yep.
really what I think that was why that was written into the Constitution, right? Is to allow for risk takers. And I don't think women by and large are huge risk takers. And that is one thing that I have seen and I have noticed in myself. And that is something that I've really been working through, because, like if you want to live this big, boisterous, amazing, vibrant, like all the things life, like you are going, like it
Absolutely.
involves risk, right? And sometimes that means it doesn't work out the way you thought it would, but God's spirit source has a better plan for you and it will work out however he wants it to, right? And so I think
100%.
being willing, and I'm not saying, bet it all on the house. I'm not saying that either, but I am saying like you have to be willing, right? To like you and your husband, Jax, like you were willing to take that risk, if you even want to call it a risk, right? Like I like to look at it as like you are investing in yourself and in your future. And you've learned lessons along the way, and you'll come out and you'll be fine, and you'll, make different decisions or the same decision, but a different way. Like, and so I just think that as women, what would you advise to empower them to bet on themselves more? Like we bet on our children's education. We bet on our retirement 401k or our SEP account, or we bet on all of these external things.
For
And
sure.
we haven't always developed that skill set of betting on ourselves.
For sure. So first of all, I mean, you've got to understand, guys, that there's a lot of noise, more noise than there probably ever has been. Not just the noise inside yourself, but the noise of society, the noise of your family, the noise of strangers on the internet who feel like they get to weigh in on your life choices for some odd reason, right? Like, but on the flip side of this, there has never been a better time for you to be able to find your people, right? The people who are going to uplift you, who are going to be in your corner, who are going to give you good advice. And you can't be afraid to not only one, seek those people out, but you can't also be afraid to ask the question. And I get it. It's an uncomfortable feeling to feel like you should know something and you don't. But remind yourself that none of this, none of financial anything was taught to you unless it was done by your parents. Your school
Hmm.
system did not teach it to you, right? Likely your college, unless you majored in something that was like financially related, they did not teach it to you. So,
Even if they did financially teach it, which I received financial education, I did not receive emotional
no, correct.
regulation education, which I think is
Correct.
way more important than the financial aspect,
Oh,
right?
1,000%, right? 1,000%. And so you just have to remind yourself that, like, a lot of times this guilt and shame is kind of coming out of a place of almost hilarity. You know what I
Yeah.
mean? Like,
Yeah.
think about that. Like, would you be mad at your child if they came up to you and they were like, Mommy, I don't know how to do this? And you were like, how dare you not know how to do this? Like, would you
Hmm.
start screaming at them? Like, absolutely
No.
not. You're not going to start screaming at them. But somehow we have this perception about ourselves that, like, when we become adults, we're just supposed to have it all figured out.
Yep.
It's not true. It's not true, right? And like we all have unique sources of power. We all have unique gifts that were provided. And so find other people that are able to help you flesh that out. And then also take the time to yourself, right? Step back. Don't be afraid, to meditate. And for a long time, I was moving at such a fast rate and such a click because there was something I guess in my mind on how I was raised about productivity, right? And like if I worked myself to death, like that meant that I was like achieving the highest level of success or some nonsense like this. And then I was like, man, I don't even like what the heck I'm even creating over here. Like this life that I'm living, like why am I even making these choices? And so you can't be afraid no matter what it is, mortgage or otherwise, right? To ask the questions, to dig deep, to find community who is going to give you perspective without guilt or shame, because that's
Hmm.
different. Somebody pushing back on you with perspective and trying to say, hey, Aaron, I need you to see that this is how this is, right? Or this is something that you might want to take a look at or consider, versus somebody saying, Aaron, what are you, stupid? Like, why in the world would you do it that way? This is clearly the only way you should do it. Like, that's not the way. You know what I mean? That's not the way.
Yeah.
And so, and you just have to trust in yourself. And I feel like as women, I don't know why this is. I think part of the reason sometimes we feel like men succeed higher than us is because we are constantly doubting ourselves. It's like
Mhm.
society and our families and everybody have put this unnecessary pressure on. And men are like, oh, I failed. Okay, whatever. And they just like move on the path. And so the truth is we need to take a little bit of a page from that playbook and realize like we're gonna stumble and we're gonna fall. And it's so different than we teach our toddler or our kids. Okay, you fell, right? Like be in all the feels for a minute, be upset and emotional and whatever you need to feel, let it all out. But then let's not beat ourselves up about it. Like get back up and move on down the path, right? And so I've definitely had to learn that more than I'd like over the last couple of years, but in a weird way, it's made me better at being able to share my story and give more women permission to step into themselves. Like, wow, she came from this like horrible, crazy financial situation and she allowed it to not break her. Mind you, I am still behind the scenes, struggling at moments, crying, being upset. You know what I mean? But on the same token, I still know it's not a representation of me personally. It's not a personal
Yeah.
failure, and I don't need to take it or hold it as such.
Yes. I think what we do is we internalize it and we make the circumstance mean something about us, and it means nothing about us.
Correct.
We literally have the power to make it mean whatever we want it to mean. So if that is true, which I believe it is, then choose it in an empowering way to fuel you towards next thing versus to draw you back into your shell and to not take any more risks. You said two things that I wanted to go back to is
Sure.
like working with people that empower you, that do push back on maybe your mindset. Cause I probably would be that guy, right? Like I probably have, I think we've always done like 30 years and then I moved it to 15 and then I moved it to 7. Right. And so I was doing that kind of thing. And so it is important to have people that push back on you. And you were saying, but not the ones that with the shame and the guilt. And I always advise clients in on the podcast, it's like, we don't have to tolerate any body talking down to us.
Absolutely
And I
not.
think a lot of people do. It's almost like, well, I have this amount of years with my CPA and it's going to be air quotes difficult to find someone. It's like, yeah, but that's worth it, right? That is worth it to go find someone to treat you well, to have people on your team. And the other thing I think about is I think that just as the more money you make, just the numbers just get bigger in terms of risk, right? Like, so a risk to somebody who's never taken a risk might be a couple $1,000s of investing in themselves, right?
For sure.
Somebody who's taken millions of dollars of risk, their risk might need to be tens, 15, 100 million. So I think it's all relative. And I think that it's just like, I want to challenge or for you to ponder, you know, where is my risk? Where is my next step? I shouldn't say risk. Where's my next step? Where's my next growth? And like, am I doing
For
that
sure.
or am I shying away from it? And you'll know by how you feel in your body, like if you're doing that from a place of, um, pressure or you feel like you have to, or that's very different energy than like, no, this is what I want. This is my heart's desire. I want to do this, but it feels a little bit uncomfortable. That's a go sign. If it's, I feel like I have to, or someone's telling me I should, which we hear, like you were saying, Jax, about everyone telling us what we should and shouldn't be doing or how we should invest or all these things that we hear. Um, really got to tap back into yourself. So that brings me to the point of like real estate investing. I have women that want to get into real estate investing. And of course, the question is, I don't know how, which we never know the how, right? Until after
For
it's all
sure.
said and done. But the desire is there. And I think a lot of times they think they have to have all the money first. And I'm always an advocate of like, no, you take the step forward. You have, maybe it's a little bit of the money and then you figure out how to create more money. It's not, let me have all my money, all my eggs, and then I'll go figure out how to do it.
For sure. So first of all, I think what you were describing before is important for people to remember that in order to live the most big, beautiful, wonderful life you want to live, you have to expand your container. You can
Yep.
only expand that container. You can only take more on if you are pushing yourself into the uncomfortable and not the uncomfortable, like you pointed out, that somebody else forced you into, but the uncomfortable that is a step forward in the direction that you want to go in alignment but also is not exactly like you don't know everything, right?
Yep.
And it is like the more you force yourself into that, the more the better that you can do. When it comes to investing, there is a lot of different ways and strategies that people can do that, right? And so if they know early on they want to invest, they can try to make their very first home, right? Like they can turn that into an investment. For a lot of other people who don't want to do that, it sort of depends on how big and bold you want to go right from the rip. There is a ton of investment styled loans that are created. Like, for instance, I'm not sure if you're familiar with what's called DSCR loans. DSCR stands for debt service credit ratio loans. And so basically what's happening is that you actually don't qualify yourself. It's the property that's qualifying. So
Yes.
yes, you typically do have to have somewhere between 15 and 25% to put down of the property value, right? But understand that um they're doing an appraisal to determine what the actual rental amount would be and what the payment is based off of, and that's how it's being determined. And it also can be protected in an LLC, so like the entire thing can be done in an LLC and etc. So you're not then risking potentially your personal finances. You're not, putting other things and something like that, up at risk. If they're not trying to do it all on their own. There are now groups that do it. So like maybe you have a few friends, 2 to 5 people, and you want to come together cumulatively and start that LLC, and you want to come in and do a DSCR. So that allows you now to offset some of the risk that you're holding, right? So there's tons of different ways that you can do it. I think the biggest question you have to ask is how involved you want to be, right? To be able to invest, because there's also large companies that do real estate investing where you're putting a percent of money like into a group and you're just receiving dividends from them. One of the ones that's most famously known right now is like Grant Cardone. That's one of the things he does, is basically you take some of money and you place it with them, and they're investing it specifically in real estate holdings. The real estate holdings
Like
are
a
then,
REIT,
what'd you say?
or just like a REIT, or
Kind of. Yeah, they're basically in there, they're
their own.
purchasing
Yeah.
certain different kinds. And there's ones
Yeah.
that are not as big as him. He's just like an
Yeah.
example because he has a huge one. But
Yeah.
like I know a friend of mine, they have a group and they do nothing but that. So they basically say, hey, we're gonna go in and we're gonna buy 1 or 2 apartment complexes. And now everybody's capital investment is gonna be XYZ dollars. And then you're gonna receive dividends on this amount or whatever. And they have the portfolio to prove that they know, how to do the math and all that. So involvement is going to be a huge deal because you need to
Mhm.
kind of decide, are we looking like on a really more traditional path, like we're trying to build a real estate portfolio, we are the landlord, or we're finding somebody, a property management company to manage our real estate investments. That's like probably the more traditional path. And you can use either, a lot of people will like buy a primary home, they will go, and that allows them to put less money down. For those of you who are wondering why, it's because of a risk factor. And so they have to put less money down. They may only have to put 5 or 10% down, right? Versus a 20 or more percent down. And so then they'll live there for a year or so. And then they move out of it. They move in another property, turn that into a rental. So there's like these particular kind of ways, or like I said, you can do DSCR loans. These are more traditional paths. Or you can go and you can find these groups who are doing it a little non-traditionally. They are sort of coming as a collective, and they're pooling money together to be able to purchase real estate in that way. So lots of unique situations. It just depends on, I would say involvement is really the bigger question, and capital investment, right? Like how much are you willing to pony up for this particular investment? The market right now, the thing to keep in mind is we have been in a seller's market for almost 5 years, and this is the first time in over 5 years we have not. We are in a very much a buyer's market, and so for investors, this is music to their ears because it means that they can go in and negotiate, they can get money off or whatever, or if they have a significant pool of cash, go in and buy maybe 4 or 5, 6 homes, right, from a builder or something like that. And so lots of opportunity exists if it is something that is exciting to somebody to look into. Again, I'll just say that it's about alignment. So you have to ask yourselves before you step into anything like that, just step back and say, is this a path that I want to take? How involved do I want to be? How much money, capital do I want to give up? And then just kind of step backwards that way. Hopefully that kind of gave you maybe a high
Yeah.
level
Yeah.
understanding.
It's so good that you said that, because my husband and I, we were walking, we like to walk downtown in the little like areas. I'm sure every small town, or not small town, but every like downtown area has it. Like we had it when we were in Austin, right? It's like these little pockets of like
For sure.
homes that have been renovated and, are either being sold or rented. And we were talking about getting, back into real estate investing, and talk about alignment, Jax. He was like, that would be something I would do. And I was like, hang on a second. Like, Aaron 5 years ago that did all of that? Sure. Aaron now, I don't know if that's energetically where I want to spend my time. And you really have to think of your energy like a 360-degree circle. And
For sure.
the more arrows that you have pointing out is the less energy that it has going to that. So if you have, 40 arrows pointing out versus 3 arrows or 1 arrow, right? Like energetically, and so just being really clear, like not making a decision from money, because my mind would say, oh yeah, there's so much money to be made here. Like I see it. This is, and I've said this before, but Boise to me reminds me of Austin 25 years ago. And
Oh,
we
I
know
don't
what
disagree.
we know what Austin looks like now, right? So the money is there to be made. It's do I want to put my heart and my
Yeah.
energy there? And I think I think you have to be really clear on that, like what you're saying, because the mind will want to take over. And because we value as a society money, making money so much that we don't actually check in with our hearts to be like, yeah, but do I want to? And the energy that you enter something in is the energy that it's going to come out, right? So if
100%.
I were doing it from a place of just making money, I'm probably going to have lots of problems. I'm probably going to have all of these things that show up because the energy isn't from a true heart's desire. It's more of a like, okay, I could just, make some quick money.
Well, you also aren't necessarily going to have the wherewithal to continue because remind
Yep.
yourself that regardless of how well things go, at some point life is gonna life and it's gonna throw a wrench, right? When I was going back and I was explaining to you on the back end all of these potential wrenches that can get thrown, if you don't love what you are picking and choosing to invest in and be a part of and put your time and your energy and your money and all these things into, then what's gonna happen is when things go sideways or when when things don't go according to plan, well, guess what's going to happen? You're going to be like, oh, see, I knew this was going to happen, right? Like, and it's almost like you projected that energy, like you said, into the mix
Assumption.
at the onset, right? It's
Yeah.
why I firmly believe in you, and I've had some conversations that people shouldn't solely just invest in, like maybe the stock market. I'm not saying
Yep.
that you don't make those investments if that's something that is good, but if you have other places of alignment, right? If you've got other avenues that really light you up, probably whatever is lighting you up is going to be the path that you should be walking down. And trust me when I say I love my family very dearly, and they're amazing, amazing people. But we are very loud, very opinionated individuals, and my family does not understand a lot of my path with what I'm doing in the education, financial space, right? Like, that I have another company, Financial Mastery Simplified, which is very heavy education. It's about overcoming money blocks and a lot of these aspects that I find cause challenges and not just the mortgage space, but like an overall financial success. And my family doesn't get it. I mean, my mom literally said to me, she goes, I think it's great that you want to do that, but I just don't think people care. You know what I mean? And like, so sometimes we have to understand that just because it lights us up and just because it excites us and it gets us going doesn't mean that the rest of the world's even going to understand like what it is that we're doing, right? It's kind of like when you go into a house. I don't know if any of you have ever had this experience and you walk in and it's like it feels like home and you can't explain it, and maybe it has the ugliest colored paint on the outside and you're like thinking in your brain, man, I'm gonna have to spend like 30 grand repaint this dang house. But you know what I mean, like you just can't explain it like that is the thing. I mean, it's the same thing with investments. I think, and I think unfortunately in our space people are only ever dialing in on the dollars. And
Mhm.
I'm not saying that the math's not the math, guys. The math is important, okay? And you do have to understand it. You need to understand at a broader perspective has how the general math works, but it doesn't mean that it has to be the only decision factor when you are making choices, big financial choices, like mortgage, like investing, like all these things, right? These are big financial choices. You need to make sure first and foremost you're making them in alignment and that you are not making them out of fear or guilt or shame or any of these kind of places.
Yeah, I love that. What else do you want to add that maybe I didn't ask you? Or, I mean, I know we could go on and riff forever, but is there
We could.
anything based on what that we have talked about that
Nope.
you want to add to?
Yeah, the one thing, so there's two really quick points that I'll make. So for any of you who are maybe in the process of either looking to purchase a house or maybe that's going to be down the path here fairly quickly, there is a product that we actually give to any and everybody. Like we pay for it as a company, PBJ Mortgage pays for it, and basically it will help you look at like exactly where your credit score is, like the actual mortgage score, not these crazy credit scores that all these other companies pretend is your actual credit score, what mortgage is actually looking at, okay? It'll also help you understand how ready you are like on your other financials. And you can put as much or as little into it, right? You can share as much or little information. Like I can't go in there and like be like, ooh, what's Aaron's like every situation? No, it's not like that. So that's super helpful thing. If you are in the phase of life where you are dealing with kids that are either going to college or going very soon, Aaron and I are on the same page on this. We actually talked about maybe doing another podcast episode specifically in relation to this. But make sure that you are having conversations, guys, with your kiddos about money and making sure that you're not setting them up for failure in their financial future or throwing a grenade in your own life because you felt the guilt and shame societally that you need to be pushing them down a particular path. And I actually have something that I'll give Aaron the link to where it just kind of helps you understand like how to open these conversations up, how to be having them at the dinner table because that's the biggest thing. You're not a rock, just like a rock didn't fall out of the sky and hit you on the head when you turned 18 and you were trying to figure out money. It's the same thing for your kids. And so I get it. You don't feel prepared. You don't feel like you know what the heck you're talking about. This is kind of to help you, kind of ease into some of these conversations. And so I just encourage you in everything you do financially, live in alignment. I know that is what Erin preaches, and it's why she and I are so aligned. And we like collaborating because it is so important, especially as women. We've not been empowered for too long, and so now's the time. Take back your power. Don't let anybody else hold it financially.
Yeah, I love that you said that about the kids because I have a lot of people that ask like, how do I teach them when I'm still figuring it out? And it's like, you're the perfect person, right? Like you just start talking about money just as, I mean, I've had clients that never talked about money because their parents never talked about money. And then I have clients like myself too, it's like where finances were this like conflicting, yelling, arguing, right? So you're just learning and you're talking about it and you're normalizing just having conversations about money and
Correct.
not being emotionally charged and saying to your kid, you know what, I'm figuring it out along the way and being real and transparent because that is what they're actually looking for. And they pay attention to energy too, right? Like,
For sure.
so it's okay to say, you know what, I don't have it figured all out yet, but I am moving forward and I am looking at things differently. And I mean, I even have to like pause, tell my kid, like, hang on a second. I don't want to make this rush decision. I want to be actually have time to think about it. And it's okay to tell our kids that.
For sure.
Um, so yeah, I love it. Thank you, Jax, for coming on, for sharing our time
Absolutely.
with us. Yeah. Okay. Until next time.